start recording, and I'll hand you straight over to Tom. Just before I say that, in front of you is a 10-minute screen of the 10-minute chart rather of the E-mini for the S&P.
Hi everybody, Tom Williams here. Thank you, Peter, very much for that introduction and twiddling all the right knobs at the right time, which I thank you for. Now, what we've got up now is a 10-minute time frame, not for any special reason. All these time frames, or most of them, will give you a pretty good story of what's going on. And once you learn to read them, you will be an extremely happy person, and you'll have that knowledge with you for the rest of your life. And so it's well worth the effort, well worth studying this, because this is really what we can prove to you. This is how the market works. It works on supply and demand, and that's it, with the professional money in there creating the imbalances of supply and demand, and of course taking advantage of news. Apparently news was, I think it was supposed to be good today, and on that it's come off, look. Now, you will hear different opinions from different people, which is understandable. This is the nature of human beings. Gavin seems to keep thinking it's bullish. David Weiss seems to think it's bullish. I think it's weak. But there you are. This is what makes the merry-go-round with human beings. It's what makes them interesting. But I would strongly advise you to make up your own decisions and don't do anything in the market unless you're absolutely sure what you're doing. It's a very, very dangerous place, as you know. Very dangerous. And the infallibility of human beings, they say 90% of all people that attempt to trade these short-term markets lose money, which I believe. 85% of option traders have never exercised options, so 85% are losing money. And they reckon even stocks and shares, 50% of people are losing money. But that's roughly statistics. Statistics do seem to work. But anyway, now we'll have a look at this 10-minute chart. And you're right there, Peter. Right. We'll have a look at this 10-minute chart. We can see it's come off over the last hour or so. Right? It's fallen. However, right now, as we speak, there were some signs of strength suddenly appearing. Right, that says a test after shakeout. I strongly advise you to read all this literature in these charts, because we don't hold back any secrets. We don't have any secrets. We try to tell you everything we know, either verbally or in those dialogue boxes, or answer your questions, But it works on supply and demand, and that's all there is to it. We've had a decent fall here for well over an hour here, and now professional money might be thinking they can start entering the market. But what we would like to see is stopping volume, and I can't really see any as such. But on saying that, they may be looking at no supply at that level. But we just have to see what happens. But these signals come up. They seem fairly reliable. What we would like to see, if this is bullish, this go up a few bars, round over, you may see a red arrow or something up here, and then fall back down to this level. And the volume is very, very low. Then you're going to see a move up. Not necessarily a big bull move, but we're talking about scalping here. Now, when I talk to you, or Peter, Rita, we're really talking about scalping these markets. We find it far more exciting, especially me in my old age, to grab a few $100s, then go make a cup of tea or something. And that's what we call scalping. If you're a fund manager, active like Philip Friston, or any long-term investor, then obviously you need to be looking at the weekly, monthly charts and trading off those. And you can see then, I think that's what Gavin does mostly, because he seems eternally bullish. But it might be. Let the market tell us. But right now, it looks weak. So we started off here well over an hour ago. There we are. We have one of our favorite signs of weakness, up thrust. Right? Up thrust is a deliberate attempt to mark the price up, catch stops, misleads many people as possible, right? And that's why they do it. And there's not only is there one there, but there's one here, look. No, here. Look. And now, if we do that, we can see it better. That's better. You've got two up thrusts. There's no signal on that one, but there is on other time frames. But there's a signal on that one. Now, I usually say an up thrust, it's slightly tricky because it looks as if you've got a shakeout. They attempt to shake the market out here. But there was weakness there, look. Markets don't like high volume on these up bars. Right, and there's the high volume. It also closed in the middle, look. So there must have been supply there. Nothing else can cause that. What else can cause that? High volume. They mark it up. They're selling so much it closes in the middle. But they need to support the market to sell more on the next wave up. And that's why you get no demand as it goes up. These are all no demand. These are very dangerous signs of weakness when you see these markets move up on very low volume, especially with narrow spreads closing in the middle. When they do pull the plug, it's marked down. This is what Gavin calls gotcha bars. Rita's here. Hello, Rita. But this, in hindsight, looks like a shakeout, doesn't it? And it must have been a bit of a shakeout. What's that say, Pete?
That says potential selling climax.
Yeah, well, it's obviously not a real selling climax. It's like a shakeout. But you can see the high volume, look. That's why the computer thought it was a selling climax. There's the high volume. Down bar, the fresh low ground, closing well off the low. There must have been support supply there. That's why it went up. However, the market's still weak, and that's why you have these up thrusts. So you've got up thrusts after a sign of weakness. Now, it's a tricky one because you've got this shakeout here to confuse you. So I don't blame you if you misread that one. But that's what caused this decline. And you see that once the professional money is in charge, right, they're not supporting the market. That's why it falls, right? So red bar, red, 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 allow one up bar, which is beyond low volume, down, up, low volume must be, down, and now we've reached a low. And professional money now have eyed that and thinking, right, can we move in here? And that's what's causing it to go sideways like this, so we can watch that. But what we'd like to see, you really don't do anything until you see a clear setup. We'd like to see 1 or 2 bars go up, round over. They come back down here and test, and the volume is very, very low, and that means there's no supply, and you'd expect higher prices on that. You're not expecting a bull market, you're expecting higher prices. Now, if you're a long-term investor looking after your pension or something, then you really need to look at longer time frames, especially the weekly or monthly.
Okay, folks, so there's a slight disturbance or break there because Rita's turned up and she's gone off to make a couple of cups of tea and a coffee. Not that that's that interesting, I suppose, but that explains the slight silence there. So let me just see what questions have come in. Bear with me. So this is a question from Lewis. Well, there's two questions actually, we'll do them together. Well, first of all, what do the 4 hours and 1 hour charts say to you? That's the first thing. And the second thing is, how can a 10-minute chart give an orientation for the midterm market? Tom. How can the 10-minute chart give an orientation for the midterm market?
I don't understand that question. What was it?
How can a 10-minute chart give you a midterm direction for the markets? So what value is it really?
Well, answer that last question. The value is that you can see in front of you. If you're a scalper, this is what you want to know. Right? But if you're a long-term investor or fund manager or something like that, then you need to look at longer time frames. But we can look at the 4-hour chart. I see you like to look at longer time frames, which is nothing wrong with that. Now I've got the. Is that it there? Right, there we are. Now this is a 4-hour chart. Right, now you can immediately see the market's been whipsawed, was marked up at the opening, look, violently marked up, catch stops, mislead as many traders as possible into wrong positions. We know it's an upthrust because it finished up closing well on the low and the volume is massively high. Markets don't like ultra high volume on up bars. And that's plain to see everywhere. The only time you have high volume on up bar, if it's pushing up through supply to the left. And there's no obvious supply to the left on this chart, is there? And that's the only time you might allow it. And then you expect that to be tested. They turn it around immediately, look, mark it down, that's a gotcha bar. They whipsaw in the market. And that's obviously done by the professional side of the market. That's not normal behavior. You can see for yourself. Now you can see how this 4-hour chart's been crawling up, look, over time. You can read all these bars, you know, individually. But we never seem to have got into that, have we? But that's a weak bar because it's up bar, look, on high volume. Right, they tested it. Okay, so that means they wonder where they go higher. They mark it up, look, sign of weakness. That'd be no demand. That's a test. That'd be no demand. They mark it down for the shakeout that we saw. They're trying to shake the market out. That's a ploy for higher prices. There's a sign of weakness there. That would be no demand. A test. Right. and on that they allow them to have an upthrust. So that's a 4-hour chart, which is quite interesting. Any questions on this 4-hour chart? Rita's here. She's looking at the screen now. She's made me a nice cup of tea. Oh, coffee. We can't work well. Yeah, we can't really work, English people, with that cup of tea.
Have we had a 10-minute chart up at all? We have. All right. There's a question on the 10-minute chart. Do you want to go back to it? To go up through that weakness, do we need to see stopping volume on heavier volume than that weakness?
Well, actually, that's a good question. Do we need stopping volume? Because I've seen these markets recently reach low, and it's gone up, not on stopping volume, but there's no supply there. In other words, there's no volume. So they marked it down. Nobody wants to go any further, so the volume is very low. That's enough for them to turn it around and start marking it up. But of course, if you see stopping volume, that's going to make a more substantial up move and a more reliable up move, because you can clearly see they've moved into the market. So you don't have to have anything. Remember, reading these charts is an art. We don't use mathematical formulas. We don't expect 2 and 2 to make 4 here, because you're involved with human beings here. That's the trouble. They're a devious lot, and they're there to make money for themselves, not you. So you're strongly advised to wait until you see an obvious sign of strength or weakness. Now, it's pretty obvious, those up thrusts at the top, isn't it? I mean, they've even got signals marked on them. So it's there. Now, if you are not geared up to trade, then you have to train yourself up to believe in the principle and to act. That's part of your skill as a trader anyway. I mean, I've done it myself, so don't worry, we're not all that clever. I've sat here and I've seen an obvious sign of strength or weakness and just did nothing. So I really wasn't interested. I was interested in looking at it, but not interested in rushing off doing the trade. So that's, that's part of human nature. Now remember, if you're a professional trader, you will be an expert on the results you would get from different market movements. And that's why they have shakeouts. That's why they have upthrust. That's why they have testing. That's why they know that their actions will disturb the herd or the rest of the trading population. And that's what they rely on. And they're very good at it. And you can get good at it too. It will go against the grain because the news will be telling you everything else. Apparently the news was good today, look. Probably came out on that upthrust. Gavin just said the news was good. I wasn't quite sure what he was talking about, but it's very, very common that if you could cut out news items from your newspaper or wherever you get it from and kind of attach it to a chart, I think you'll find what we tell you is true. The good news, they use the news to whipsaw the market against the normal behavior. See, the trouble is that's why you have trouble in analyzing these markets, because the average person is not used to being lied to, even subtly. I mean, you might think there was something in it if you went to buy a second-hand car from a used car dealer. You know perfectly well he shines it all up, puts lots of wax on the outside, but he's got a lovely story for you of how good it is. Now, that's not necessarily true. You know that. And the market's very similar. Any questions?
Robert is asking, can it be a spring on this chart, 10-minute chart?
No, it's definitely not a spring. It can't be a spring. How can it be a spring? A spring is when the market goes sideways under usually fairly obvious accumulation. Then just before the up move, they ram it down, catch stops, mislead as many people as possible, then turn around fast and go up. That's a spring, but we haven't seen any accumulation yet. We've seen it go sideways, and we've seen 1-2 red arrows, but there's nothing positive there, is there? Not that I can see. It's definitely not a spring. Definitely not.
Eleni is asking for the weekly ES. You haven't looked at that yet? No, not yet. That's the monthly, just coming up. We've got some trend lines on. If we put the bigger picture, because we've already, it looks like we've got some trend. All right. Okay. Can you see? Yeah.
Right. When we put the bigger picture up, we can see that we are oversold. Now, I can only see really 20 bars properly, and even that's a bit of trouble at times, unfortunately. But usually these charts you see, these long-term charts are fine, giving you some idea of the overall direction. But they're used for these people that use mathematical formulas more. We don't need that. When I first designed or instructed the program, I said, look, the trader must be able to see the volume in connection with the price action. That's why we need the cursor vertical on the price and on the volume. And then you can see the result of the activity or the result of the volume at the bottom of the screen, right? What did it do on that volume? If the spread is up and narrow, it means that there's supply coming in. Something must have made the spread go narrow. If it's fallen and the spread is narrow, then something must be causing that. Some support must be there, stopping the lower end of the price from falling, creating a narrow spread. And the only people who can do that are professional money. And they will have 30, 40, 50,000 contracts on the go. And that creates an imbalance of supply and demand, right, in their favor until they decide to close out their trades or whatever they're going to do. Now, this is what a weekly. If somebody wants to look at a weekly, well, I mean, even here you've got up thrust, haven't you? This isn't working, Peter. That's better. There's something funny with this. But there's an up thrust there, look. So you'd expect the market to fall off on that. It is going up, and the thing is that here, you see, this is definitely a shakeout. When they mark it down like that, and we've even got some signals on here. Basic test. Well, potential stopping volume. There's your stopping volume, which is true. Look, it's a red down bar, massive activity going on, and on that activity, close the middle. So you know, professional money saving. Then the next bar, they mark it further as they can, spin it around, close it to high. This is really a gotcha bar. Up, and then they start looking around and testing. And there's a red down bar, look, that would be on a narrow spread, close the middle, which is sign of strength, low volume, which I must have told you 100 times now, that that's a strong sign of strength. And that's why it went up, look, a few bars. But that's a sign of weakness there. Well, when I say sign of weakness, you expect lower prices to follow. Doesn't mean to say you're going into a big bear market or big bull market. Markets work on supply and demand. And that's all there is to it. If you could figure that out, you've got it made. The signals there help you. But that's definitely a shakeout down below there, here. I can't remember what we said when that market went down there. You remember, Peter? Over a month ago. Yeah.
Right. Eleni says, Tom, when that bar concludes at the end of today in the quarter, sorry, I must be talking about, have we moved over? Yeah. When that bar, sorry, I've read this a bit late, Eleni. When that bar concludes at end of today in the top quarter, then what will we the weekly? If it finishes at the top quarter and furthermore above the week of the 3-7.
No, you see, what's making it weak is that it's an up bar, narrow spread. Notice how the spread has narrowed relative to all those previous bars. And the computer tells you, I think, should do, if you look on the bottom here, right, somewhere here. It's not complete yet. No, just volume low, closed middle. Yeah, it's not complete yet, but the spread is narrow, you see. That's a sign of weakness. It's weak because something causes that spread to narrow. I think if you look at that so-called wave, is it the Weiss wave or whatever they? That's what it's trying to portray. Is these up thrusts, the market thrusts up but doesn't get anywhere, and that's a weak wave up. But you can see that with your eyes. You can see it in the chart. That's an up bar, narrow spread. That's not going to go anywhere at the moment. So you're not being misled. That's a sign of weakness. Now we're talking about scalping. We're not talking about if you're a fund manager looking for the next year or two.
Bruce is asking, So we're on the 5-minute ES next. Tom, what happened to this chart this afternoon? At 3:10 BST, there was a no demand. There it went down, up, down until 3:45. There was no news on Forex Factory. What does Tom see in this chart? 6E. Are we on the 6E? 6E, 5-minute. What's 6E? Oh, 6E down there, sorry. Go 6E, 5-minute. That's it. Right. I'll say it again. What happened on this chart this afternoon? At 3:10 BST, there was a no demand. There it went down, up, down until 3:45. There was no news. What do you see in this chart, Tom?
Sorry, what are we looking at?
This is the euro. 5 minutes. Yeah, just wait for Tom.
So this is a euro. And sorry, Rita, what was the question? Yes. Yes. Well, it did go up, look, and down. There. Well, that looked like a form of upthrust, wasn't it, there? In hindsight, we can see it was. There's a narrow spread. And then this is a gotcha bar. They marked it down heavily. That's a sign of weakness. But there must have been a bit of buying in there because it closed in the middle. And that's why it's moseyed sideways, shall we say. And there was a little bit of buying here and there. There's not a lot of selling pressure, look, on these red down bars. That's why it has done that. So that'd be when the market opened, whipsawing. This is professional money playing around, trying to wrong foot people, catch their stops, mislead as many people as possible. But when you look at these red down bars, there's not a lot of selling pressure at all. In fact, that one there, look, that's a test. That's another clear test, look. A test. It looks just like that, look. Although it's a red up bar, normally a blue up bar, but normally they're on red down bars. But what happened here, they marked it down. The test was successful fairly early on. By the time we got around to it, it's blue. It's gone up on it. That's why it went higher. It's just the devious practices they get up to. But there's weakness in this chart now. I mean, there's definitely a sign of weakness there. There's support here. You can see that by the high volume as it came in, and it closed in the middle. They're testing it. Look, that's a sign of strength. And that's why it's floating up like this. It's not, I don't think it's ready to fall yet. The reason is, I think, because of this here. There definitely seems to be buying here, look. And they had this test. That's bullish. But this is lurking in the background. There's a fight going on there between the bulls and the bears, as they say. Because you know all these professional traders, they hate each other's guts anyway. They may, when they're trading, they don't like each other, believe me. They may shake hands and have cups of tea and coffee together, but when they're actually trading, they do not think of anybody else. They can't do. It's their skill as a trader, and that it will do anything devious, believe me, to become to a successful end to their trading.
Edmund is asking, can we look at the Nasdaq 100? It is very weak today. That's YM. Oh, there we are. So the half hour.
That's the Nasdaq, is it? Yes. Well, we've seen this with the Nasdaq. It seems to tear off on its own well in advance of the Dow and the S&P 500. But remember, the Dow is part of the S&P 500. And apparently the Nasdaq, can't seem to get this. Is that it? Right, sorry about that, folks. The keyboard's working fine now. There's nothing all that obvious here to tell you there's going to be a huge fall, look. Well, perhaps I should. Now that's a little bit better, look. They're testing on the way up, look. That's why it went up. But don't forget, this will move in harmony with the Dow and the S&P 500. It's marked up, look. The volume is far too high, look. And that's why I moved the chart to the end of the screen so that when the volume comes in from the opening of the US markets, it doesn't hide this fact is this very high volume. See, now it drops low, look. And it drops low because this is even higher. The computers look at relative volume. It's not clever enough to say, well, look, okay, that's high volume, yes. Well, it was high volume. But the computer now looks at it and says, well, this is higher. And that would be, relatively speaking, no demand, look. And notice how the red trending system works. Down, 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 down. And this too has also got some signs of strength appearing. Test. That means it's been marked down. The spreads are narrow and the volume is low. And there could even be some buying here. But mind, when you get these arrows like this, it tells you in the text. Tend to ignore them if the next bar is not level or up. And it's not, it's down, look. So you must read those dialog boxes. Unfortunately, I don't have access at the moment to a programmer. Although we are working on a new system that may hopefully shake the world. In other words, we're going to have an index which will automatically correctly tell you the exact highs and lows of these markets. And I don't know what effect that will have, but I don't see how they can interfere with that. because it's working on supply and demand, but we'll see. But if you want to know any more about that, you have to talk to Gavin. Any other questions?
Yes, we have some suggestions from people for the daily and the weekly of the Nasdaq.
Why use the future?
Well, the volume's wrong.
Eh?
The volume will be wrong on the future.
Well, the spread will be right, though.
It's going to be right. They put the volume on the wrong day.
Well, Peter's saying that, they mess around with the volume, which shows you there's a lot of skullduggery going on. When they interfere with the volume, they know perfectly well there are a lot of professional traders out there who can read the volume. What are we looking at?
Nasdaq futures daily.
Is that what they want?
Yes.
That looks weak, doesn't it? I mean, these wide spreads down like this. Whenever you see a wide spread down closed near the low on increase in volume, as it rushes towards a former area of support, which is there, look, is a sign of weakness. Because when we're looking for our principle, right, we'd expect to see this as steadily down bar on narrower spreads. Not so violent as this. Perhaps 1 or 2 or 3 down bars. And then you look at the volume, and it's low. But here, look, it's not that at all, is it? First of all, it's a huge wide spread down, closing near the low, on heavy volume. So supply is there. That's a sign of weakness. It can't be anything else. Even though it looks like some stopping volume there. Don't forget, a lot of this professional money make mistakes as well. They're not all as clever as you might think.
Oh, and the weekly as well.
It's showing the same thing, look. You've got this shakeout in the background. But here, look how it's mushrooming over. That is a sign of weakness. When you see a chart that's slowly mushrooming over like that, the cause of that is every time it goes up, they mark it up, but it's hit by supply, right? It's destroying the top end of it. And they push it as much as they can. That's a bit of high volume, a little bit on the downside, and that is supply, look. This is definitely high volume on that bar, closing in the middle, look, after you've seen this mushrooming shape. So there's weakness right there, look. That's actually quite a good example. So you've got a blue up bar. It's on high volume, high activity. And on that high activity, it's closed in the middle. Right? And in the background, you've got this mushrooming over. Even with a red arrow here, look, which must mean something. And that's why it's coming off. And even that there looks weak. That looks suspiciously like an upthrust.
I don't know if anyone can answer this question, but Gordon says, do you know if the scanner can scan for weekly? Can you answer? Is that a no, you don't know, or no, you...
No, I don't know.
Oh.
Yeah, this is on the end of day, I assume you're referring to, the end of day chart, which is this one. There is a scanner, and I don't know, actually. You could just ask Trade Guider. I'm not aware that it does, to be honest. I've never seen it I've tried a few times to have a look myself and see what's what, and it doesn't give you a choice. So I would say it's highly likely no is the answer. But you can check with TradeGuider if you're really, concerned or interested. Yeah, support@tradeguider.com or something like that.
Okay, lumber. Can we put lumber up?
About lumber?
Yes.
Right, so this is lumber, continuous contracts. On the daily chart, Peter, yeah?
Correct.
Now, do we have stopping volume here? Is there, what's this?
That says potential stopping volume.
Yeah, there's a little bit there. Not a great deal, look. But I don't trade lumber, so I'm not an expert on this chart. But it's gone up on no demand, which we'd expect. Because we'd expect, especially with a professionally driven market like lumber, to be tested. So down it comes. It's reached that level, look. In fact, the volume is very low, look, or quite low. And that's why the market's gone up. It went up, but it's hit supply for some reason or other. That is definitely supply, look. Yes. So that's why it's come off 2 bars. I would be very cagey about trading this because of that. That's definitely supply. Even though there is a sign of strength here and a sign of strength there, but something must have happened here, look. It's very high volume, look, you can see that. That's a danger signal. So I certainly wouldn't touch lumber at the moment. Although, well, saying that, the volume is very low here. Look at this level. So to me, it looks like it wants to just go up and down sideways. But if we didn't have that terrific upthrust up there with all that supply on, I would say, yes, you're right. Potentially, it looks like a good buy.
So Tom, Eleni has shorted this at 360. Up here. Can you see that, Tom?
Yeah.
And says wants it to break the pivot and continue to follow through. What do you think of that, Tom? Yeah.
Well, she should be out of short this strength here.
Do you want to speak, Tom?
Well, it was obviously a good short, but you're taking the risk. And once you see this here on these lows, that, and then when they tested it, you're certainly going to be short when you see that.
What if it breaks through? What if it does break through?
What, downside?
Yeah, this down that level. There's a level there, isn't there?
Well, normally you'd see if it was going to break through, you would expect to see a widespread down, close on the low of the bar with a slight increase in volume, not heavy, but a bit of an increase, as they kind of put their foot down really on the gas pedal to push it down. But not enough volume there to say, look, it's stopping volume when they're buying. That traditionally has been some sense, we don't actually see that at the moment. But congratulations on shorting it up there.
Eleni is going to cover, she says. Right. Pete asked this question, Tom. If the market makers know where all the buy and sell orders are, why do they have to test?
Well, it's still nice to know, isn't it? You know, there's so much devious carrying on in the markets. I mean, I know some individuals or specialists or companies, they will mark artificial prices up on the screen, and they do it for publicity. There's no intention of trading at that. If anybody rings up and say, oh no, we've closed that. They do that a lot. So there's a lot of devious carrying on going on. But testing is definitely usually, well, we know it's a certain way to test the market because the market usually goes up after a test. If it's spread to the background, it always does go up. So we know that works. It's not a good idea to be too clever trying to figure out whys and wherefores. Read the chart, believe what the chart's telling you, and forget about trying to understand exactly all the minute details of what's going on, because you never know anyway. They'll never tell you the truth. If you were lucky enough to get hold of a big trade, you'd probably lie to you anyway.
Question here, what is more important, a sign of weakness or strength on high volume or high or low in the near background or older? Do you understand that question, Tom? Because what is more important, a sign of weakness or strength on high volume or high or low in near background or older? Do you answer that, Pete?
Just read it again. What is more important? Sign of weakness or strength? Please rephrase.
Could you rephrase that, Joe? Because it might just be a case of some punctuation. Yeah?
Well, we know definitely that any up bar on unusually high volume is a sign of weakness. If the up bar occurs after we've seen weakness in the background, it might only be 5, 6, 7, 10 bars back, there's guarantees it's going to be weak. So we know that. Now the opposite is true for the bottom. If we see stopping volume or testing, and we've had a down move in the background, and you see what we call a test or shakeout, if the volume is low, that's a sign of strength, because it means that when they marked it down, the professional were not interested in following that price. They just sat back knowing the market was strong, so they're not concerned about groups or other groups trying to shake everybody out. Does that make sense, Rita?
Makes sense to me.
Kjo says, I see high volume sign of weakness and no demand. Good. And see no supply near old low and market shuts up like spring. Yeah, Tom? Oh.
Well, funny enough you mentioned that. I've seen several times lately, you see the ultra high volume on the up bar, right? It may even gone up on good news, but probably has, right? It may even be look bullish everywhere, everybody's happy. Close it near the low, but the next bar goes up on no demand. I've seen that a lot, and that's guaranteeing, that's more or less saying, yes, professional money have seen that weakness. They've marked it up, the floor traders, whoever's marking this marked it up, but there's no interest from the professional money because they know damn well it's weak. And that's a sure sign of weakness. I've seen that several times recently on these charts.
John would like crude oil, Peter.
Crude oil, long term.
That trend line's not right, is it? No. Yeah, Peter, you can take the trend line off. Doesn't look right. That looks better. Now, crude oil, there's obviously a sign of weakness here, look. I mean, it's like an upthrust, but there's no volume on it. They marked it up deliberately, and there they're trying to shake the market out. That looks like a test there. That looks easily as if it could go on up. Not necessarily a huge bull rush, but you would expect higher prices on that. Yeah, well, this is just a shakeout back here. See, don't forget, they have these shakeouts. Don't forget, it's usually the same professional groups that are trading these things. And they tend to do the same thing all the time, or similar. Why? Because they're human beings. That's why it's advisable to specialize in certain areas. Now there's a sign of weakness up here, look. Yeah, so that went up there on no demand, look. And there's no demand. Why? Because it's running into this top, look. And that's why it's come off. But it looks to me as if it wants to try to go up again. Crude oil.
Oh, all right. GE, Peter. I don't know what GE is. Oh, is it R? Yeah, then, Tom?
General Electric has been around for donkey's years. I remember we used to trade this. There's a test there, look. That bar there has got a signal on, but it looks like what we call a weak bar. There'd be a signal on some time frame. And the very next bar, look, they tested it. They know that they see the weakness, they tested it. And then they marked it down, look. Narrow spread, closed near the high, volume is low. That's why it's gone up. However, it seems to be hitting no demand up here. Yeah. Read those dialog boxes, please. And then you get to know what we know. But this certainly doesn't look bearish. But it looks if it wants to carry on, it'll probably drift down a bit and go up again. Okay?
Okay, we're running out of time, but shall we look at the ES, go back to the ES, and Leslie is saying, does the ES look like it's rolling over or shaking out? That's the daily so far, but what, well, or, that's the hour, yeah.
Well, it certainly, it doesn't look buoyant, does it, in the market? I mean, we saw all this heavy supply here. Look at that. Look at that one. Up bar, look, narrow spread, close on the low, and look at that massive volume. Professional money, no, this is weak. There's a gotcha bar, bang, bang down. This could be a shakeout. It's certainly not going to tell you it's going to go into a bull move at the moment, that's for sure. Anyway, I would say thank you very, very much for listening. And we'll be doing a newsletter Sunday. I don't make it too long, so it's easy for you to absorb the information. And if you do it bit by bit every week like that, you'll get to know what we know. So I say thank you very, very much.